Oh man, so the market is waiting nervously for the outcome of a critical FOMC meeting. In this video, we're going to explain exactly what to look out for from this FOMC meeting, how it can move the market, and more importantly, how to position yourself to not get wrecked and also take advantage of any opportunities if they come. Make sure you hit up the like button. Don't forget to subscribe. As always, guys, if you want to trade any of these moves with me, do get yourself set up on BYBIT to get $4,000 in bonuses. You've got PRIMEXBT offering you up to $7,000 in bonuses, so check out the links in the description. But in this video, we need to cover off what's going on, and the first thing to look at is that Bitcoin is fairly stable today, and you've got markets pretty much level here today. You can see Dow Jones pretty much flat, S&P flat, and the Nasdaq flat after taking a huge pummeling yesterday. The S&P is at its lowest level since March 2021, 21% corrected from all-time highs officially in bear market territory, okay? And we covered that off in the video earlier on today, that there could be a lot more to go. So make sure you go watch that video as well to get an understanding of what my thoughts are on the wider, longer term markets. But in terms of the next 36 hours, we know that the FOMC meeting is convened as we speak today and tomorrow. And tomorrow, we will find out if we're going to get a double rate hike or something different. We're going to break down what the different options are and what it could mean for the markets. We're also going to get something called the summary of economic projections. So this is really important as well. And we're going to break down what to expect from that. So the first thing we can see here is that Bitcoin is relatively flat today. We're just waiting to now hear from what's going to happen from this meeting. Now, we know that leading up to the last few days, the market had all but priced in a double rate hike, but this has now changed to 90% of the market has priced in a triple rate hike. Yes, the market is now expecting that given the high May inflation CPI reading, Jerome Powell may have to come out guns blazing with a triple rate hike to shock the market to say, hey, pay attention to me. I'm trying to reduce inflation and it needs to come down. If we take a look here, let's take a look at this one here. You can see this is the CPI reading, and we got the latest reading of 8.6. This is despite a 0.25 basis point hike and then a 50 basis point hike. So the market is shrugging it off, and inflation continues to be miles away from the target range that the FOMC wants it to be at. So no doubt they're going to come out aggressively. I'm sure Jerome Powell's wording he's going to use is going to be incredibly aggressive as well. Goldman Sachs revised their thinking. They've said that they believe there will now be a 75 basis point increase. Remember, this is despite Jerome Powell at the last meeting saying 75 basis points is not on the table, and the market actually rallied when he said that. But that's now people are saying that's going to change. So Goldman are thinking he's going to go 75 basis points, another 75 basis points in the next meeting, then 50, and then 25. Now, importantly, we're going to get the summary of economic projections. This is that extra little pack that they sometimes provide in the meetings. You don't get them in every meeting. We didn't have it in the last one. We will get it in this one tomorrow. And in that, the Fed officials give you a dot plot where they specify when and how much by they would vote for the rate hikes to be. So that always gives you a good indication, as well as their employment figures and GDP numbers. So we're going to have to look at that because no doubt they're going to revise some of those GDP figures to the downsides, which could spook the market as well. The moral of the story is Jerome Powell really needs to get this down. And so far, the market has not really respected his 0.25 and 0.5 interest rate hike. Is he going to come out and say, no, I'm going to be patient, I'm going to do 0.5 and see the course and see what happens? Or is he back against the wall? Has he got the pressure from Biden, the pressure from the US public to say, look, prices at the fuel pump are heavy, I'm struggling with my rent, I'm struggling with my energy bills, you need to bring this down? And is he just going to come out guns blazing like Paul Volcker and drive through a global recession just to force inflation down? Those are the options he has. Now, fear and greed index is sitting, as you would expect, at extreme fear. We spoke about the whole Celsius drama and how crypto itself has added some more stress to itself than it needed. Again, that's now making front news headlines on CNBC. This is all about the Celsius FUD. So if you want my explanation on the Celsius FUD, go watch my video from earlier today. You can get my viewpoint on it. But definitely, we're not doing ourselves any favors. We'd be down anyway, right? We'd be down anyway because the whole market is down. We've got huge companies down right now, let alone crypto. We've got huge market cap stocks, traditional stocks getting hit at the likes of Apple, Microsoft, Amazon were severely down yesterday and continue to be unable to bounce back today. So we need to watch out for that. Now, what does that mean in terms of chart patterns? Where are we at here on the hourly for Bitcoin? Let's just switch across to the hourly here. And what we need to look at is we've got this support here at 20,800. If we lose 20,000, guys, things can get really, really horrible to the downside. What we need to be careful of is if we get some extra hawkish news from Jerome Powell, like a 75 basis point hike, which I think that's actually priced in now. The question is going to be, will he shock with us to the downside with the dot plot, with the summary of economic projections, the GDP projections, and also some of the wording he uses in the Q&A? Because if we lose 20,000, remember, that's the peak from the previous bull run, and it would not be great if we lose that to the downside at all. The bull situation, which could give you some confidence in somewhere where you could potentially start looking at a long, is if we can get above 24,000. If we can start holding this yellow line again, then we can start trying to think, can we get back into the channel? And the natural position for us is to run up to 28,600, which was this blue line which we held for such a long time on the channel. Okay, so that's what we want to look at here on this pattern. Now again, if you guys want to trade this, you can go ahead and do so on BYBIT and PRIMEXBT. PRIMEXBT have a really nice platform. You can head on over into here, you can click on this button here, and you're going to get all your trade patterns. You'll be able to deposit money from your Binance or from a credit card, and you can go ahead and trade your favorite tokens on PRIMEXBT. So do consider checking that out. They're offering up to $7,000 in bonuses, but be careful, guys. Do not trade on a sinking ship. Make sure you wait for the entry. Get your money deposited. Wait for the right time. We'll be talking about entry points here on this channel. We'll be talking about chart patterns. Right now is not the time to be going long. If you're shorting, that's up to you, but I personally don't short. You won't be seeing any recommendations from me on shorting. So there you have it, guys. Really, really important update coming over the next kind of 36 hours. Literally right now, the FOMC officials will be sitting down and making their mind up on what are they going to do. And their backs really are up against the wall. They've got a really important decision to make now. Do they want to plod along and do what they were doing and go ahead with their plan despite the CPI figure being at 40-year highs at 8.6? Or are they going to come back out and say, hang on a second, we're not going to be disrespected like that. We're going to go 1% interest rate hike. If they do something like that, something crazy like that, and really bring forward the quantitative tightening and make that more aggressive, we could see the market falling. And if the market starts falling, Bitcoin has not got a lot of room to protect that 20,000 high. Okay, and that would be really concerning because from a structural point of view, you're now going lower than your previous bull market high on Bitcoin, which is unprecedented and can get a lot of people spooked. Remember, loads of people will start to be in super high unrealized loss positions on dormancy flows. We also know that many large institutional players will start to have their liquidation prices around sub 20,000 as well. So things could get pretty ugly. So we need to keep an eye on that. So far, we need to stay level-headed. That's the key here in this crypto market. If you're in this crypto market right now, you have this amazing opportunity to be buying at prices from December 2017. Can you imagine? In other words, you are 5 years late to crypto, yet it doesn't affect you. You still have that same opportunity. But some people will not grab that opportunity. And the reason they won't grab it is because they don't have the conviction. And that's the key. If you don't have conviction, you're not going to buy. If you don't have conviction, you're going to panic sell, right? And that's the reality. Those with conviction who are learning, who are developing, who are getting better, they see this as a beautiful time to enter the market. They've seen the bull runs and the falls. They saw the early days of Bitcoin. They saw, therefore, afterwards when Bitcoin ran up to 20,000 and then dropped back towards $4,000 and then ran up to 64, then dropped down to 29, then ran up to 69 in November of 2021, then dropped back down to where we are today at 22,000. Right? This is all part of the crypto journey, and we know that's part of the narrative. And those who are managing to navigate this moment and not panic sell and dollar cost average and build their conviction, those are the ones who are going to be rewarded, when we start running back up to our all-time highs. Yes, it could take a while. Yes, it could be painful. Yes, there could be more blood. So that's why what I'm doing in the market right now is I'm just nibbling. I'm nibbling in on my favorite plays: Bitcoin, Ethereum, a little bit of Cardano, a little bit of other things, even like BNB, which are larger caps. I'm happy entering some of those positions, but mainly focused around Bitcoin and Ethereum, just to make sure I've got enough of those that I don't regret scooping up not enough Ethereum at $1,200. This was at 4,000. I remember when it was at 4,000, it felt unstoppable. It felt like a matter of time before it got to 10,000, right? You got Bitcoin sitting at 22. Did you think you would be saying that again? I mean, at one point, it felt like it wasn't going to break back down under 40. Then 30, we thought was definitely the floor. So now, sitting at 22, you just got to look at it and say, is there more downside or is there more upside? And make your decision based on the risk-reward calculus from that. Hope you guys enjoyed this video. A lot to watch out for over the next 36 hours. No doubt we'll be covering it here. So make sure you are subscribed. Make sure you've gone ahead and deposited in BYBIT and in PRIMEXBT, and you're going to be entered for a chance to win an iPad when we reach 10,000 subs. Yes, we're also going to be doing a whole bunch of random airdrops, and I'm going to be doubling accounts as well. So if you're deposited with us and you're subscribed, You just need a couple of dollars in each of those accounts and you're eligible to enter. So we'll be going in and doubling people's accounts. We'll be doing random airdrops. You'll be winning an iPad when we get to 10K subscribers and a whole lot more. So make sure you're signed up using those links below. Thanks for watching, guys. We'll see you in the next one.